Hello, I'm Kimberley Dondo, Digital Content Manager, and welcome to In Conversation With, the podcast series that delves into the world of financial services and brings you face to face with some of the most notable figures in the industry. Listen as we discuss topics that are currently facing the industry and hear from visionary CEOs to disruptive innovators as we bring you a diverse array of voices and perspectives. We'll explore the challenges they faced, the lessons they've learned, and the insights they have to share about the ever-evolving landscape of financial services. Hello and welcome to In Conversation With. I'm Kimberley Dondo, and in today's episode, I'm joined by Charles Jillings, Fund Manager of Utilico Emerging Markets Trust. Thank you for joining me today, Charles.
Kimberley, thank you for having me, and I'm looking forward to the conversation.
So we have spoken before, but for those who may not have heard that episode, could you give us a bit of background into yourself and how you got started in the industry?
Happily. I started out in, if you want, accountancy, then investment banking in the city. And having given 10 years of advice, I swapped to the other side of the fence, if you want, and became an investor in 1995. So nearly 30 years ago. And since then, I've been involved in investment and fund management. And in 2005, we set up Utilico Emerging Market in response to real interest from investors to gain exposure to emerging markets in the way in which we invest, which is through utilities, infrastructure, and communications, which I think have strong fundamentals which drive them and are attractive because they're long-term in nature, and we can properly model and predict outcomes and be more confident about the investments that we make. And around 2005, there was a lot of interest from the market, and we set the fund up.
Mm-hmm. Great. So UEM has consistently highlighted its focus on infrastructure megatrends such as energy transition and digital infrastructure. So now that we're in 2025, how have these trends evolved, and what's the impact on emerging market investments?
So just something to touch on before we touch on those mega trends is just to note that the fundamental drivers remain. Urbanization remains a drive. The growth of the middle class in cities is a driver. They're looking for an improved experience, be it in clean water, be it in waste, be it in travel. And all of these assets that we're investing in are going to meet those needs. Mm-hmm. And I think the other thing to note is, the emerging markets still enjoy strong GDP growth. And while Trump may dampen it in the beginning, we remain convinced that over the medium term, growth will shine through. So those drivers remain. But the overlay around energy transition, so moving to green energy, putting in place the future production, if you want, remains incredibly strong. China is absolutely investing in renewables, but so is Brazil, so is Indonesia, and all these countries have a strong investment pipeline. If I look at digital, it's probably accelerated. Mm-hmm. I know everybody's alighted on AI, but the reality is that just the interface commercially, and apps like Airbnb and Uber and Grab, etc., are generating a huge amount of activity online, and that growth and that energy I expect to again accelerate, AI being a part of it. But I can see digitization going deeper and providing more investable opportunities for us. If I look at things like clean water and waste, We've got two investments, interestingly, last year that moved up, and they're both driven by meeting that demand from populations. And again, I think looking out, we can only see a much stronger growth prospect. And the final one was around, if you want, trade. And while everybody, I think, is anxious about Trump and his impact on trade, my observation would be, if I went back and looked at Trump 1.0, as people refer to, when he brought in tariffs and certainly dissuaded companies from setting up in China. Yes, we've seen Mexico grow to be bigger than China, but I would say my biggest observation is the entire pie grew as new supply lines were established, new relationships, new manufacturing base. And I think Trump 2.0 ought to look similar.
Okay, that's a positive outlook. But you also did touch on Brazil, and Brazil has remained a significant part of UEM's portfolio, representing 25%. So what's your outlook for Brazil, and what factors continue to drive the confidence in that region?
So the 12 months through December have been both a positive and a negative. The positive is that the individual investments that we've made have performed extremely well. Investments like Sabes, which is the water utility in Sao Paulo, and the port of Santos, which is just on the coast, not far from Sao Paulo, have both done extraordinarily well. Both in terms of volume, but also in terms of margin and therefore value. And certainly the share prices have been up very strongly. The headwind has been the currency. So it's not around our assets, it's not around the strength of our management team, which are the two things that we do focus in on. But currency's been a massive headwind. I think over 12 months, the Brazilian real is down nearly 25%. And that's certainly held us back in terms of the performance. Why is that? There is a real unease with the policy direction of government. And I think Lula has lost the confidence of the financial market. And so you've seen an outflow rather than an inflow. And because of the weakness, we've also seen inflation creeping up. And therefore, we've seen the central bank take an incredibly strong stance on interest rates, which they've risen aggressively. And that's impacting, if you want, a little bit on the outlook for the economy, but also, as I say, Lula's stance has caused the currency to weaken. That's it and done. I think a lot of other currencies weakened over the time frame. India is another one. But our assets generally across the emerging markets have performed well.
Okay, so with 2025 underway, are there any specific sectors or infrastructure assets in emerging markets you now see as particularly promising? Are there new areas you want to explore more deeply this year?
So I think this year might be two areas we might look at and see if we can unearth investments which can give us the outcomes over time. One's health. There's a definite swing by governments to improve people's outcomes. And we're seeing, if you want, governments shift from what I would call hard infrastructure to include much more soft, so around health, around education. That'd be one area where we will have a look and see what we can find. We've already got one investment that's in the top 30 in Indonesia, and it's performing well. It's a growing hospital group.
Okay.
The second is data centers. everybody I know reads about Apple and Microsoft, and quite frankly, the astonishing amount of capital that they're investing. But if you go to somewhere like Malaysia, where I was recently, their ambition is to become the leader in data center provision in Asia. And if you want, a lot of the investment that will be made over time will be, in my language, distributed. In other words, it'll be across economies. And in fact, because of, if you want, they're coming not behind, but they're coming with the benefit of the US and UK and Europe experience, they can build out their infrastructure to optimize the outcome. So you're seeing Malaysia team up with Singapore. Singapore, short on land, short on energy, but wants to participate in this bright future. And so they are forming joint ventures to bring on supply, etc. So I think data centers and the whole explosion that's taking place is another fantastic area or interesting area to be focused on.
Yeah, I feel like all I see recently is tech companies being obsessed with people's data. So that data has to be stored somewhere. That makes sense. So UEM has been attractive to investors for its performance and dividend history. What strategies are you employing in 2025 to continue this track record, particularly with ongoing market volatility?
I think two things. One, we've always been cognizant that emerging market volatility can, from time to time, be higher than the developed markets, although the developed markets have been pretty volatile. We spread the investments, so no investment over 10%. At the moment, our biggest is 6%, so we've actually spread it even flatter than usual. And that's just to try and mitigate a surprise in a particular company or in a particular economy. We've clearly got a spread of assets from, if you want, data centers through to, as I mentioned earlier, hospitals, but airports, ports. And I think all of them, therefore, provide a degree of resilience. If you take a sort of working hypothesis that emerging market GDP is set to grow for the next 12 months, we can have a long discussion about the strength of growth in places like China, but the Philippines and Vietnam and Indonesia are all set to grow. They will need more energy because to drive GDP, you need energy. More energy means more investment opportunity or performance for our existing assets. So we're focused on those things. In terms of dividends, it's an outcome of our investment process. I think the thing to note is our assets are operational. So it'll be a port or an airport that's already up and running. And therefore, it has volumes going through, it has profitability, cash flow. Over 80% of our investments pay a dividend. And from that, we can obviously then pay a dividend to our shareholders. Over time, the dividend's risen, and I think that's a real positive. And if you look at our earnings in the first half through September, they were up nearly 9.9%. All that tells me is the underlying portfolio is performing in line with where we would want to see it. But I think our dividend at roughly, we increased it at the last one by 8%, just over 8%. So today, our dividend yield is running at about 4.3% if you annualize that quarterly dividend.
Right. And excuse me if I'm repeating, but I didn't know if you wanted to add anything more, because obviously with geopolitical and economic uncertainties remaining present, how does UEM manage those risks? I know that you said that you spread across so that it's not just in one place, in one area, but are there any other strategies you have in order to protect a portfolio?
So I think in terms of trying to protect our portfolio against geopolitical risk, we try to stay abreast of developments. We try to understand where the pressure points are. But my observation is that Trump is certainly going to come out negotiating on behalf of the US and its consumers and population.
Mm-hmm.
On the other side, there are leaders who are going to be wanting to look after their own country's interests. And I think somewhat we hear a lot from what America wants. We don't hear a lot from what others might want. I actually think, given the nature of Trump, who's a deal maker, who wants to find a win-win situation, I actually think we might be pleasantly surprised by some of the benefits which will flow from a repositioning on a number of items. I think at the moment, we want to wait and see how those negotiations go, quite frankly, before looking at where we dive in. But today, our portfolio is about as undervalued, as cheap as it's ever been. And the opportunities are about as wide as they've ever been. So I'm excited sitting here today.
Okay. Another positive outlook, which is good to hear. Energy growth and transition have been key themes in your portfolio. So how do you see the energy market in emerging markets evolving? You've touched on it a little bit with some of the countries that need that energy in order to grow their GDP. So can you expand a bit more on that?
Certainly. We're seeing most governments auction both capacity around renewables, so wind, solar, hydro, but also auction extension to transmission lines. Both of those asset classes are, if you want, attractive long-term investments. And so we can sit and invest into the ones that we think will deliver us the best outcomes. And that's looking at the strength of the management team to take on that added, if you want, wind farm capacity or take on their added transmissions. One thing I would notice, if you look at our portfolio, a lot of it is actually about transmission. So somewhere like India Grid Trust is a vehicle into which assets are put. And those assets, if you want, benefit from a strong regulatory environment. And this trust structure means they need to pay out nearly 90% of their income. And today they're yielding 10% with a good growth outlook. So I'd be, very excited about holding them through a if you want, turbulent outcome, because they are underpinned by, if you want, needing to be available as opposed to volume-driven usage.
Mm-hmm. And before we started the recording, we actually touched a little bit on your on how you have dealt with any pushback you've received from shareholders. So could you go a bit more in depth on that?
So one thing, and I did touch on it at the beginning, is just to note that we promoted Jacqueline Brewer, who's been Deputy Portfolio Manager, to be manager alongside me. And next time, I'm hopeful she will join us. And the promotion reflects clearly a reflection on her ability, her capability. But much more importantly to me, we've got a management team who've got decades of experience in this sector. Jacqueline's been with us over 14 years. So she brings, I think, a lot to, if you want, sit alongside me, but also looking out. And I should try and answer the question. I'm not looking to retire. Always make the observation that many others have been here late into their 90s. But it will give us time to actually, work together and develop the strengths that we all need to invest in what are long duration assets. Coming back to, if you want, shareholder expectations of investment trusts, two things I'd note. One, we've actively gone through a refresh of the UEM board. So over the last 4 years, 5 directors have retired naturally because they've come up to 9-year term limits. We've replaced them with 4 directors and used the opportunity to marginally reduce the cost from 5 to 4. But I think we've got 4 fabulous independent directors, 50% women, average tenure is clearly young because they've recently come on, so 3 years. And I think they will be able to challenge and guide us through over the coming years in the relationship with our shareholders. I think the other thing to just note is alignment. And a lot of people talk about or question alignment or skin in the game. All the board take their fees in shares. Still think we were the first, and I still think we're one of the few that does that. So over time, they will all build up a meaningful investment in UEM. I've got £1 million invested in UEM, so I'm absolutely focused. The fund that I manage that sits above UEM has got 25 million invested. So we're all aligned on what are the outcomes we're trying to achieve. And I think the other thing to note is the board clearly has responsibility for things like dividend policy. We talked about the strengths of that, but also around buybacks. And we bought back, as a fund, 170 million. We bought back 2% in the 9 months to December. So I think it just shows, if you want, the determination to reduce the discount if we can, but we are subject to the market's views, and we always respect that.
Yeah. And for our audience of financial advisors, I wonder what key factors should they consider when recommending UEM in 2025, especially in light of market and economic shifts?
So I think a lower risk asset class, which they'd understand. Beta runs at about 0.8, which is low. A performance over time that I think is demonstrated by our outperformance of the MSCI 3-year, 5-year, and since inception. Strong yield. And I think they can almost buy the shares and wait for the uplift in value. And just one thing on value, emerging markets, like everywhere outside the US, are cheap. They're undervalued, I think, in the local market. And you're buying our shares at a discount in the UK market. So the upside, I think, is there to be gained. Quite when it will come through will depend on any number of policy factors like interest rates and exchange rates. But I'd be optimistic that the emerging markets have borne quite a lot of downside, and therefore at some point the upside will come through. And if I look back over time, yes, we've had downdrafts in UEM portfolio, but over time we've come back and gone above the market and delivered.
So would that advice be the same that you would give to advisors or investors who might be hesitant about, investing in emerging markets?
Both.
Okay. Yeah.
I think if the proposition I put to both of them is we will seek out and put in the best investments that we can, and the portfolio will stay 100% invested. We won't go into cash. Clearly, your decision on emerging markets. But I go back to it, never been so cheap, big discount, good yield.
There's nothing wrong with that, exactly. Well, Charles, I think that is everything that I had for you today, but thank you for joining me for this conversation.
Thank you very much.
Thank you for listening to In Conversation With. We do hope that you enjoyed it. Please do keep up to date with all our new releases via Podbean, Apple Podcasts, Spotify, and everywhere else you get your podcasts from. You can also keep up to date with all our new content published on the Money Marketing website, as well as our print edition Money Marketing magazine. So make sure to subscribe. Follow us on Twitter, LinkedIn, Facebook, and Instagram. See you next time.